Well, good day, smart traders, and welcome to another weekly market recap. My name is Francois. I am the senior analyst here at Smart Online Trader, and I'm going to take you through the events of this week that has passed, and I'm also going to show you a few fantastic trading opportunities just as an additional special for next week. That being said, kindly just familiarize yourself with the risk disclosure currently on your screen, bearing in mind that everything that I will be sharing during this session is purely my opinion of the market and should not be taken as financial advice. So now that we've covered all the legalities, let's get into this. Let's have a look at what happened during this week so that we can obviously better prepare ourselves for the week ahead. So during this week, we definitely saw that recession is starting to become a reality. And this was not just in the USA. This was especially in European markets. Yes, they were a bit resilient, building on last week's post-US inflation gains, despite the fact that the October inflation for the pound came in at a record high, absolutely crazy, coming in at 11.1%. We did, however, see that both DAX and the CAC 40 remained in the green this week, although it was just, okay? They didn't have fantastic weeks, but they remained in the green. Each one of them, the DAX was up 0.85%, CAC 40 was up 0.3% for the week. However, momentum looks to be fading, and this is what we want to capitalize on now going into the week ahead. So with that momentum fading, we can definitely see this currently in the FTSE 100, starting off there as the FTSE started pulling back a bit towards the end of the week, and it actually closed with a 0.4% down for the week. For the US, despite signs that inflation has peaked, obviously we saw that their inflation has come down a bit. Investors are still increasingly worrying that recession could kick in likely within the next year, which could spell very, very bad news for the US. But this can even be potentially worse for Europe. That all being said, let's have a look at a few charts. So starting things off with the dollar index, here we can see that the dollar didn't really move this week. Obviously, after last week, we had so much movement in the market last week. And this week, we can see that, well, we basically closed almost exactly where we opened 5 days ago. Yes, there was some downward momentum, but the dollar on our dollar index here has found serious support around that 106 level, and now we can see it actually closed just under 107. And obviously going into the week ahead, we can definitely look for some additional bullish momentum on this specific currency again. Moving over to our Euro USD pair, we can see that exactly copy and paste from what happened on the dollar index. The Euro USD pair found resistance around that 1.04 level and actually closed the week just above that 1.032 level. Now from here, we can see if we open on Monday, still below that resistance level. Myself personally, I'm definitely going to start looking for some short positions, looking for those positions down to that 1.02 level. And if we break that support that is just under it, then we can start aiming for even lower points and maybe even potentially seeing parity again. So definitely some great things to look out for in the week ahead. Additionally, let's also look at the cable. So the cable, that is obviously our GBP USD pair, and our GBP USD pair, you can obviously see loves channels. We first had that downward channel, which gave us so many trading opportunities, and now again in that upward channel. So we can definitely see that this, exactly the same as Euro USD, found some serious resistance around that 1.2 level and has now also started pulling back a bit. So if we can stay within that actual channel on Monday, I'm definitely going to start looking for some short positions, selling this specific instrument down to that 1.16 level, and maybe even to the bottom of our channel, which is just above that 1.14 level. Moving over to indices, as I said, Yes, DAX had a good week. Yes, it built on that momentum from last week and it did close the week at a positive 0.85%. But we can also see it is running out of momentum, it is running out of steam, and it's also right at the top of our trading channel. So if we can actually close below that trading channel, so that is around that 14,440 level, then we can start looking for short positions. Additionally, we might just push a little bit higher to that resistance at 14,600 and then start looking for those short positions back down to that 1400 level, and then we can adjust our trades from there onwards. Finally, for today, let's have a quick look at crude oil. So here we can see that oil prices sank this week despite increasing optimism towards the end of China's zero COVID policy. We saw Brent as well as WTI dip 6.6% and 7.7% this week respectively, with demand squeezes mounting from rising COVID cases in China and renewed fears of an aggressive Federal Reserve for a longer time period than expected, the result of which would be a stronger dollar that weighs on the oil price amid the slowdown in energy prices. OPEC stated that the group is ready to intervene again for the benefit of the oil market. So here we can now see, if we're looking at it from a technical point of view, that oil actually closed within our channel just above that $80 a barrel level. So if we can stay within our channel on Monday, definitely going to look for some buying opportunity on this back up to that $84 a barrel level. And then if it breaks that resistance level, then we can start looking for those new high points back to that $92 a barrel level and beyond. Traders, I trust that you found this analysis beneficial. I trust that this is going to assist you in your trading going forward this week. So as always, may the force be with you. Cheers. Traders, I trust that you found this video super beneficial. If you haven't done so yet, kindly smash that like button and subscribe to our channel. And as always, may the force be with you. Cheers.